Afternoon, everybody, and thank you for taking time out of your busy day to attend this 10-15-minute intro. I'd like to introduce Manx Financial Group to you. We're an AIM-listed, diversified financial services business with a strong focus on lending in the retail and SME markets in both the UK and the Isle of Man. But before going into that, we'll have to go into the obligatory disclaimer, which I'm sure you've seen 1,000 times before. But I don't want to dwell on that because Alex said I had to go through a decent kilter. So moving to the listed entity itself. So MFX is the ticker, got a market cap of just under 17.5 million. We've got a NAV of 36 million and we're operating a discount to NAV of just under 52%. We've been profitable for a number of years. Profits have grown for a number of years. The last set of accounts that are in the public domain are as at June 24. So profit for the half year was 3.5 million, up from 3 million the same period the year before. And the full year number for 2023 was 7 million, and that's up from 5.3 million. Full year profit in the last published accounts was 7 million, up from 5.3. And our 2024 numbers will be out in April. But if we focus now on the profit before tax and have a look at the drivers, you can see the profit's really been driven by the increase in the loan book, up 8.6% to 372 million. And also that was accompanied by a strong increase in yield. So it's very unusual to get both the loan book growth and the yield growth coming through. In the group, we have two banking licenses. We have one banking license in the Isle of Man, which is the same banking license as HSBC, NatWest, etc. have. And we have a banking license in the UK. This allows us to arbitrage between the two jurisdictions to minimise the cost of funds and maximise our net interest margin. We also have, it's a very accounting language, my apologies, high quality liquid assets. That's either cash or T-bills, government T-bills. We are hugely liquid, we've always been hugely liquid, and that'll be a common theme throughout this whole presentation, will be how we deploy that liquidity and why it gives us a unique position in the market. Okay, so a bit of background here. The Isle of Man has £43 billion of deposits. 23 billion is in sterling. That's the opportunity for us. There is 10 other licence holders in the Isle of Man chasing that 43 billion. There's a huge amount of liquidity there, but the downside is the Isle of Man itself only has 85,000 people. 85,000 people only need so much credit. The opportunity is 65 million in the UK. Hence the reason why we lend almost 84% of our total lending in the UK. Just to give a bit of background on the UK banking landscape, there are 11 clearing banks in the UK. There's 350 licensed banks. That means over 300 banks in the UK bank through a bank. There's an opportunity there for someone, but that's not my opportunity for today. My opportunity today is to talk about that 2,500 and 3,500 non-bank lenders. Those are people who are currently getting their liquidity from either high net worths or from banks such as us. They are in markets. There could be a geographical market, there could be the M62 corridor inside the M25, or it might be market specific, it might be premium finance, asset finance, etc. So what we do is, we look at that 2,500, 3,500, sorry for the, it depends where you look at the FLA stats or the FCA stats. Let's just call it 3,000, we'll go for the middle ground. We look at that 3,000 and go, right, what sectors are you in? And are you in sectors that we like? We've had a positive experience in since 2016. If you are, then that's a way for us to gain additional market share. Or are you in sectors that we want to have a presence in, but we don't want to disrupt the market? So we'd look to acquire or put debt in through you to get into that market. So the key takeaway from this slide, apart from the fact that the market size is 59 billion in the UK, the key takeaway is there's a huge amount of liquidity that we've got access to, and the distribution into those 3,000 non-bank lenders. This chart gives you the feel for the last 6 years as to what our lending growth's been like. As you can see, it's been pretty steady increase year on year, and that's what I'd expect On the Isle of Man, we lend about 1 million a week. In the UK, we lend 6 million a week. The UK, as I said, is the big opportunity. If I can double the Isle of Man lending, it's 2 million a week. If I can double the UK, that's where you start to see the huge gains. The chart on the right-hand side is profit attributable to shareholders. And we had a dip in 2020 during COVID, the first lockdown. But the interesting thing to me about this slide is we bounced back within 12 months. So there was no COVID hangover. It was like straight back into business, pent-up demand, and we accessed it. Conister Bank was formed in 1935, so we've been around for a wee while. Although I might look 90, and trust me, I'm not quite there yet. I need some of Jim Mellon's longevity to get me through. But it's the bank that holds the 2 banking licenses, and that's where it gets access to the liquidity. Edgewater is the largest IFA on the Isle of Man, but the rest of this presentation I want to talk about Manx Ventures. That's the entrepreneurial arm of the group. That's outside the regulatory envelope. For example, Conister Bank's regulated by the PRA, the FCA, the Isle of Man FSA. But in ventures, we can be far more private equity in our approach. So let's just start talking about ventures. Ventures owns, either wholly owned or partially owns, or has options in 11 companies. So we've been pretty active in the last few years. And it might look like, what do all these companies have in common? Well, it's a need for liquidity. So that theme's coming back again. Banks have got a strong access to liquidity. These businesses need liquidity, and we'll talk about it slightly in a moment. Apart from organic growth, we've got 2 other strings to our bow growth-wise. We've got growth through incubation. We are not frightened to back startups. If they're going to be in a sector that we've got proven experience in, or a sector we want to be in, we'll back them. But sometimes, as you know, debt alone does not give you the return that the risk needs, so you will take equity in these businesses. We've grown businesses from startup to being, one of them, for example, is the largest lessor of fermentation tanks to the brewery industry in the UK. We grew that from 0. We also, it depends on the sectors they're in, pay it monthlies there. We've got Payment Assist, the MD of Payment Assist is with us today. That's Buy Now, Pay Later. And if you think of Buy Now, Pay Later, it's a great product to have since 2016. Once we knew borders were going in, we thought there could be a recession. We never foresaw COVID. Buy Now, Pay Later grew all the way through that. You now look at Klarna with a valuation in something like 8-9 billion, looking to raise 1 or 2 billion. You look at Citigroup investing in Apple Pay. First time Apple have made a relationship with a financial services company. Buy Now, Pay Later. JP Morgan have accessed this. We see that as a great product for the future and a great product to take us into other jurisdictions. Acquisition strategy. Everybody has an acquisition strategy. Ours is quite fine-tuned. It follows that incubation strategy. Is it a sector we've been in? Is it a sector we know? Do we want more of it? Is it a sector we want to be in? On this one, we've got the Payment Assist, which I spoke about earlier. We've got the Business Lending Exchange, which is in the subprime, so it doesn't mix with any other of our income streams, and we're really careful about when we acquire that we don't fight against each other. But if we take Payment Assist, for example, if Payment Assist had another funder in, say a 50 million facility, that would be getting charged in at 8%. Our cost of funds is 4. That's 2 million we are adding to the bottom line of that business, not by changing the management, changing the strategy, just changing the liquidity provider. That's how important our liquidity can be to businesses. So there's a handful of businesses out there that we compete against, your Siemens, etc. They don't have a strategy like this. That's just not in their frame of mind. But looking forward, we will continue with this acquisition. Thanks, Alex. I have to be quick. We will continue with this acquisition strategy. There will be growth, just normal organic growth. There will be incubation, there will be acquisition. But we're also keen on using an existing product, such as Buy Now, Pay Later, and enter, say, the Irish market to give us access to the European market. We've got a great potential for growth. We've got an easy access to a deep supply of liquidity, and we've got the management team who's got an experience in and expertise of exercising these acquisitions.